Hi guys, how you doing? This is Dan with Index Option Trading on November 30th, the last day of the month after the market close. And here's a quick chart. We start off with E-mini S&P 500 futures. As you can see, the day started Monday, and the futures just went down here, and then they just started coming back here at the last minute of the rally. The last 30 minutes, there was a lot of volume here into it, and after the close they are trading higher, as looks like the market should move higher tomorrow as well, as far as the futures are pointing at this time after the close. So they're about trading at 1096 at this time, and it was definitely a rally that took place, and it came out from very oversold reasons. Let's go take a look at our chart. SPX is in a nice tight channel here, consolidation channel, and this is making a flag sideways. It has run up here, and since November 16 to 17, it is forming a rectangle pattern. And what we happened here on Thursday, when the market's players were not there, what started happening here, if you take a quick look what happened here on Thursday, Dubai news came out, the debacle in Dubai, and so on and so forth, and there were very few people, and then they dropped this market here. But today when we opened up here again, when the full set of pens came in to play this market, we rallied up in here. So this is a consolidation pattern which is going sideways, and SPX is making, this is a 60-day 60-minute chart, and we can even focus it on 20-day and 30-minute chart. Take a look at it. This is the pattern that SPX is forming. It is going in a consolidation range here, dropped here on Thursday, came back up here on 30th, and finished the day at in the middle, almost in the middle of the range at 109563. So everything looks fine here. This is a consolidation pattern, continuity. It means that the market, if it doesn't drop below 1090, 1085, we're going to come up to here 1100 again and blast off. That's most likely is the scenario that should happen, unless we have other news or some other events that take place. So it's a consolidation pattern, it's a continuity pattern, it is a bullish pattern, and it points to the moves higher. The market is making a move to go higher after its consolidation. How long this will last, no one knows, and I cannot guess on that. Let's take a look at the other indexes here, which you want to take a look at. RUT, R-U-T. This is also a 20-day, 30-minute chart on RUT, and RUT is also in a consolidation pattern here. But it's a lot different than the SPX. On Thursday, it dropped precipitously from 592 down to 577, and then it just went down here today. And in the mornings and 30th, and it started here, and then we ended the day back into the trading range or the consolidation pattern. As long as we stay in between these two lines, between 577 and 602, this is a range bound motion. It's a range bound trading, and as long as we stay there, the market is going higher, because what will happen here, it should resolve to the upside, not to the downside, because most likely these are the market ran up here, and now since 16th or 13th of November and up to now 2 weeks, this is a consolidation base that it is forming, and it is going to look like should go higher. Let's pull out of this and take a look at the year to date. And this is what it looks like here on year to date. This consolidation pattern is right here. It's actually below the 50-day moving average, which is sitting at 600, and RUT just made a bottom in candle here today on year-to-date charts, and is trying to go up higher. This market is kind of neutral. It's not overbought or oversold, so it can go either way. If the bears are able to push this thing through, they should have. And there is a theory that these two trend lines that I've drawn, that this is a descending channel, so this has moved in that fashion. But unless if it starts resolving upside, then we don't have to worry about it. As long as we stay in this mini channel, we will not be going down, which is obvious. So let's see if this descending channel forms and we start going down here towards 540 levels. and in a day or two the price will confirm these moves, and so we're looking at some of the trades which are always neutral trades right now, and we will go from there. Let's move on and take a look at NDX, which is the index, and we have a trade on it. This is what the trade looks like right now. NDX came in there and hit the 50-day moving average on Thursday, and then today it moved up higher at 1767. It closed up just a tad above, and it should look like this on the 20-day 30-minute chart. And the consolidation is not there as obvious, but it is going to looks like it should be jumping above and closing a little higher. It's kind of oversold here on this, but let's take a look at the year to date. And year to date is just bouncing off from the 50-day moving average, and the stochastics is not oversold or overbought. It's just in neutral regions. So there's a lot more to go. These are the consolidation patterns that we're seeing in the indexes. It looks more like range bound, sideways, in a different type of a market.